Hello and welcome to Moneycontrol live stream. I'm Nikki Mirchandani and with me is Nandita Khemka. Well, TCS has reported the numbers, at least the bottom line performance has come in line with what the street estimates were. Margins a shade lower than what the expectation was. Sequentially, it's a flattish growth of 24.5%. But if you look at the overall expectation, it's a slight miss on that count. But if you overall, we're just addressing the basic numbers for you first before we deep dive into it and decode the numbers further for you. Consolidated net profit is around 11,392 crore as compared to the CNBC TV poll expectation of a number of around 11,562 crore. Revenue came in at 59,162 crore as compared to the expectation of around 59,334 odd crore. EBIT came in at 14,488 crore and the poll was projecting a number of around 14,829 crore. Margins is where we need to pay the attention. Close eye on. EBIT margin at 24.5% as compared to the poll of 25%. Looks like it's not really a big miss out there. But if you look at the sequential, the trend moving out there, it's a flattish growth or the flat number that we're looking at when it comes to the EBIT margin. And do remember the fact that for TCS, we were expecting the highest amount of growth when it comes to the margin as compared to the other counterparts like Infosys, HCL Technologies, and this margin miss is coming a bit lower. If you talk about the dollar revenue growth, again a very important parameter for all the IT companies out there, that number is coming at 1.7% as compared to a poll of around 1.9 to 2%. So there's a miss coming in even on the dollar revenue growth out there, which is expected to play down on the IT performance or the IT stocks performance. If you talk about the overall number, that number is around $7,195 million as compared to a number of $7,210 million overall. But Nandita, what are you making out of this number, segment-wise, breakup, geography? What are you sensing?
Well, you correctly pointed out that the margins were a miss. Street was expecting somewhere around an expansion of 50 basis points or thereabouts, but then it has come in at 24.5%. And if you look at the order book, that's something that needs to be noted. Order book has been strong. It has crossed the $10 billion mark, and that was what the street was, hoping for, and that has happened because the large deal signed in Q4 has in fact been an all-time high for the company, and that's in line with estimates. Remember, TCS had given indications of $7 to $9 billion worth of deals, and that has been crossed because the company has seen deals worth $10 billion. And aside of that, if you look at the BFSI revenues, that have grown at say 2.1% or thereabouts on a quarter-on-quarter basis. And given the fact that there has been a turmoil in the US regional banks, and we were expecting the BFSI revenues to take a kind of a hit on that front, because you remember TCS has somewhere around 38% exposure when it comes to the US regional banks, right? And it is the highest among the tier 1 companies, right? So that is one takeaway. And aside of that, the attrition rate has improved even further. And if you look at the breakup of revenues coming in from different geographies, North America continues to be somewhere around 10%. Not exactly 10%, but just somewhere around 9.8% or thereabouts. But it was the European, end of the business that was a part, that was a major concern when even last quarter, I remember Rajesh Gopinathan had mentioned that Europe remains a concern even though North America remains strong. Let's go across to Chandra and get a sense of how these numbers have panned out for TCS. Chandra, Europe remains a pain point, or has it seen an improvement when it comes to last quarter?
So Nandita, if I look at Q4 very quickly, these seem to be, inline numbers, not overwhelmingly great, because it's still off by 10-15 million if you compare it to the CNBC estimates, both from a dollar and a rupee standpoint. So I think these are inline numbers, but as you said, margins were a miss. They expected 25% EBIT margins. They've come in at 24.5%. So, that's off by at least 500 basis, by at least 0.5%. The order book is encouraging. They've ended with $10 billion. But remember, this is not just Q4, but also FY23 numbers that we are looking at. And if you look at it from that perspective, how have they ended FY23? The revenue is up 13.7%. compared to the 15% growth they clocked in FY22. So there's clearly been a moderation in growth compared to the previous year. Will the downward trend continue in FY24? That's what we are waiting to hear from the management. We should shortly cut to them in minutes from now. And if you look at their order book for the entire year, the TCV for FY23 ended at $34.1 billion. So in keeping with, their average of 7 to 10 billion every quarter, they've met that mark. Can they continue to win deals at the same pace in FY24? Will they stick to that 7 to 10%, 10 billion target per quarter? That's something that we have to wait and see. The net addition numbers for the year. So they've added around 22,600 employees in FY23 compared to over 1 lakh employees in FY22. And to me, that is a big red flag, because headcount addition continues to be the best indicator of future growth for IT companies. The fact that this has come down almost to a fourth compared to the previous year means that growth numbers are not going to be as great as before, or perhaps they overhired the previous year and they are still in the process of absorbing them. So we'll have to wait and see what the headcount addition is going to be like in FY24, if it will be the same as FY23 or if it will be in line with FY22. So I think these are some of the monitorables that we will wait and see. We are still awaiting the management commentary. If I look at TCV on a year-on-year basis, FY23 they ended at 34.1 billion, whereas FY22 was 34.6 billion. So marginally lower, but can they continue to win deals on the same pace in FY24 as well? That's something that we'll have to wait and see. But overall, if I look at a fiscal year perspective, it's been a decent year for TCS, but this year is going to be crucial. Can they continue to keep up with the 7 to 10 billion TCV? And will they continue to grow in double digits? The low teen double digit growth rate, that's something that we have to wait and see.
Chandra, the constant currency number has come in at, revenue rather has come in at 0.6% on a QOQ basis. That is still better than what CNBC TV18 poll is throwing up for other companies like, Infosys or HCL Tech. So what would your thoughts be on that front?
I haven't been able to analyze the constant currency numbers. I saw the reported numbers and, they seem to be largely in line, because if I look at the revenue growth revenue numbers, the rupee revenue has come in at 59,162 crore, which is off by a bit compared to their estimates, and their dollar revenues have come in at $7,195 million. I think CNBC was projecting 7.2 billion. So it's off by 10-15 million. So those would largely be inline numbers on the top line. But yes, operating margins, their expectation was 25%. That's come in at 24.5%. We'll have to wait from the management on whether this was because of lower than expected utilization, or if there was pressure on the pricing front. Those are granular details that we'll have to wait and see. But the order book remains strong at 10 billion. And they've also said that, the all-time high number of large deals were signed in Q4. So we will wait to hear from the management on what these deals were. And also, the status of the BSNL deal, because the street's also been waiting for some clarity on when that will be signed. So I think those are some of the details we're expecting. But overall, if you look at it, UK is up 17%, North America is up 9.6%. And if you look at sector-wise growth, actually retail and CPG and life sciences and healthcare have grown by healthy double digits, 13% and 12.3% respectively. BFSI was up 9.1%. We'll have to wait and hear from the management on what trends they see there, because BFSI contributes to the majority of TCS's revenues, over 35%. Major exposure to North America, which has seen a string of banking crises, from Silicon Valley Bank to Signature Bank to also the recent fire sale of Credit Suisse. So what kind of, pressures they see there. But on the attrition side, the LTM attrition has dropped by 120 basis points, and it's currently trending at 20.1%. So those are some of the highlights that I could pick up. I believe the press release is also out, Nandita, and I'll quickly get the management.
Chandra, I'd like to add in there are some of the comments that we'd like to highlight for our viewers out there. Rajesh Gopinandan, the Chief Executive Officer and the Managing Director, says that it is a very satisfying to look back at the strong growth overall that the company has projected in FY 2023 on top of the mid-teen growth in the prior year, the strength of our order book, which technically is at all-time high, demonstrates the kind of resilience of demands for our services and gives us the visibility for growth in the medium term. Kriti and I are working closely to ensure that the leadership transition over the next few months is smooth and seamless to all our stakeholders, and that TCS is well positioned to capture the opportunities going ahead. What do you make out of this, Chandra, the initial reaction on that one? And apart from profit margin mix, apart from the net addition, do you think dollar revenue guidance is also something which is going to play down on the performance of the company right now?
Well, TCS doesn't give a guidance, so we'll have to wait for the quality
the
of
growth
their
out there. Do you think that is something which will weigh down on the performance of the company?
Yeah, so TCS will not give a guidance, so we'll have to wait for the quality of their commentary. What are they saying for June, and what are they saying for FY24? Rajesh's commentary is pretty much in line with what we'd expect. He said that they've ended on a very satisfying note, and he's also tried to assuage stakeholders on the whole succession and CEO transition in place, where he said that Kriti Vasan, the incoming CEO, and him are working closely to ensure that the leadership transition is smooth and seamless. Interestingly, there is no quote from Kriti, so I think we'll wait to hear from him at the press conference, which should start in seconds from now. But overall, Rajesh Gopinathan has painted an optimistic picture. He's also spoken about the strength of their order book, and he also says that this demonstrates that demand continues to be resilient, and that it's given them visibility for the medium to long in the medium term. So overall, positive commentary there from Rajesh Gopinathan. But we will wait to hear for more details in the press conference. And he's also added a line there assuring that Kriti Vasan and him are working together to ensure that the leadership transition, the succession plan is smooth without too many disruptions.
Right, Chandra, hold the thought. Let me also get on board Ashutosh Sharma of Forrester, who's joining in. Well, good evening, Ashutosh. Thanks a lot for taking out time and joining us this evening. I wanted to point out that, on the margin front, it has been a miss when it comes to TCS numbers. Revenues are largely in line. What do you make out of the numbers? What's your first thought on TCS's Q4 performance?
Thanks, Nandini, for having me here. And Chandra, good to see you as well. From our perspective, we track the industry, and from the industry perspective, we are seeing that we're kind of going through a tough time overall across all geographies and across all sectors. So from that perspective, I would think the TCS Q4 performance, I've just looked at the number, haven't had a chance to go through in detail, but they look fairly in line with pretty much the expectation everyone had, and maybe I would say slightly better than personally I expected, given the transition that they were going through. I believe that this quarter and the next, as per our research, are likely to be a little bit hard for the sector overall. And I'm also kind of interested in seeing the large deal size that they're talking about, because we believe, and in fact, in our conversations with both clients as well as some of their TCS's peers, the deal size in general has shrunk significantly because clients are treading cautiously. So we are not expecting a huge number of large deals. It'll be interesting to see what they're saying there. And overall, at this quarter and the next, so basically the first half of calendar year 2023, we expect the situation to be a little bit tight compared to what we had seen back in even 2022, early 2022, when the market had just started to pick up after, before the geopolitical things started playing havoc with it. So I would say overall the numbers are still in line, but the best is probably saved for H2 and beyond.
All right, Ashutosh, hi, this is Nikki here. I'm going to start off by asking you about the order book. It's at all-time high that we're saying, and the TCV is at $34.1 billion. What do you make out of it? Also, in terms of the revenue growth on constant currency basis, the number is at 0.6%, and for the dollar revenue growth is at 1.7%. What do you make out of these numbers?
So to be honest, I'm not an equity analyst, so I really won't like to comment on the numbers the way you're presenting. I can tell you from the industry perspective that overall these numbers look pretty much in are likely to keep TCS in a fairly good stead, because their ability to convert the deals into the orders and ultimately into the engagements has been pretty good. And these if their numbers, if they're saying that the order book is all-time high, then it kind of suggests that they are likely to kind of turn the tide that we were seeing in last few quarters that they were struggling. So that hopefully this will basically keep them in good stead. But overall, like I said a few minutes ago, macro environment still needs to come back. So maybe TCS has done something really interesting to kind of achieve that kind of order book. But we believe that the times are still not, basically the sector is not out of woods just yet.
Right. The sector is not out of the woods yet. Would you say that TCS has fared better? It would rather fare better compared to other peers. That was largely the expectation. Because Q4 is seasonally a weak quarter for some of these IT companies, right? And if you speak about the European and European business, do you expect some more weakness given the fact that we've seen a turmoil in the US banking system and with the whole UBS rescuing Credit Suisse, and how this would pan out for the European end of the business when it comes to TCS?
Well, it's not just European. I think it's probably more sectoral in terms of financial services. If you look at both Europe as well as North America, the BFSI sector and the companies that have significant exposure to it are likely to get impacted in a major way. And again, when I say sector is not out of woods, I'm basically saying Q1 and Q2 of the calendar year, because per our research, we believe that overall we are starting to get back the same level of tech spending growth that we had seen pre-pandemic as of across the globe. In fact, it's still nowhere compared to what we had in 2021, which was obviously the most stellar year. Just tech services alone grew that year at 9.7%, and just to compare that with this year, we expect it to be 4.6 or 4.7% in 2023. And when I say these years, I mean the calendar years, not the financial years from April to March. So from that perspective, if you look at it, while the situation is improving, it's kind of getting back to the pre-pandemic level, but it's a sort of story of two different halves. The first half is going to be tight, the second half is going to be better. So if you're again going back to your question around whether Europe or overall other sectors, be it BFSI and others, first half is likely to be very tricky. And our prediction or forecast is that come H2, some of these macro conditions are likely to ease out, and customers is likely to start opening their purses again. Because what we saw in Q4 of last year as well as Q1 of this year, which is TCS's Q3 and Q4, most of the clients were actually not going with large deals, especially in BFSI. We saw them pulling back on deals, kind of closing certain projects, turning down certain engagements. At the same time, the size of the engagement obviously had come down significantly. So, but that situation hopefully will change as we go forward.
Right, Ashutosh. The management has started speaking. We must cut across to the presser right away.
Sure.
With us in Mumbai, and we have several stakeholders joining in on our social media platforms, which has this press conference live. We're going to quickly introduce the management. We have with us Rajesh Gopinathan, MD and CEO.
Hi, everyone.
CEO Designate, K. Kritivasan.
Hi.
NGS, our COO.
Hi.
Our CHRO, Milind Lakkar.
Hi.
And our CFO, Samir Siksaria.
Hello.
Without further ado, as always, I'll pass the floor to Rajesh Gopinathan for the opening address.
Thank you, Kritikam. And welcome once again, everyone, to our earnings presentation. I'll start off with our performance for the quarter and then cover the full year numbers also. TCS ended Q4 on a strong note. We have clocked 59,162 crores in rupee revenue, which brings our dollar revenue for the quarter at $7.2 billion. It's an increase of 10.7% on a constant currency basis from a year-on-year perspective, and 16.9% in reported INR terms. Our operating profit came in at about 14,500 crores, at an operating margin of 24.5%, which is stable from last quarter. We converted that to a net profit of about 11,400 crores with a net profit margin of 19.3%, which is a sequential expansion of about 70 basis points. That brings our EPS for the quarter at 31.14. I'm also happy to note that we have continued to maintain very disciplined cash conversion, and these profits have been translated into 11,864 crores of cash from operations, which brings our total cash to net profit at about 104% for the quarter. Overall, satisfying quarter in the midst of a fairly challenging operating environment. Most importantly, I'm glad to say that when you look at it from our customer franchise, we have been continuously able to expand our customer franchise with the number of customers with whom we do more than $100 million in revenue expanding by 2 to 60 compared to the year before. From a segmental perspective, our largest market, North America, has grown at 9.6% year on year on a constant currency basis to touch 3.7 billion. UK, which is continued outperformance, has continued to accelerate, in fact, through this year. And we are in Q4, we have done 17% year on year and bringing it to 1.13 billion. Continental Europe has come in with a growth of about 8.4%, slowing steadily from on a quarter-on-quarter basis through the course of this year, due to obvious challenges and headwinds that Europe has been facing. But coming in at $1.09 billion for the quarter. Coming in at $1.09 billion for the quarter. From a vertical industry perspective, despite everything that is going on, BFSI has clocked 9.1% year on year on a constant currency basis, bringing total revenues to 2.26 billion. Retail CPG continues a very strong run post-pandemic with the second year of solid growth. And for the quarter, they have clocked 13% year on year. And life sciences continues to deliver strong growth at 12.3%, bringing it to about $750 million of revenue. We have been very disciplined in our capacity addition. For the year, we have added 22,600 net headcount, bringing our total associate count to 6,15,000 associates. Our attrition continues to slow, and we continue to both attract as well as retain the best talent in the industry. Our LTM attrition has now come in at 20.1%, and it has been slowing significantly on a quarter-on-quarter basis, and we expect the trend to continue into the next few quarters also. Our investment in our innovation agenda continues unabated. I'm happy to say that for this quarter, we have been granted about 181 new patents, bringing our total to 2,878, which is an increase of 591 patents, which, as I like to say, is more than a patent a working day, and something that we are always very proud of in terms of the acceleration that we have achieved. Totally, we have applied now for slightly more than 7,000 patents. So that's the quarter, and let me take you through the full year highlights for FY23. FY23 revenue in rupee terms is at 225,000 crores, and from a dollar perspective, just short of 28 billion at 27.93 billion. That brings our constant currency growth for the year at 13.7%, translating to 17.6 in rupee terms and 8.6 in reported dollar terms. Operating profit has come in at 54,000 plus crores, and operating margin of 24.1%, which is a contraction of about 120 basis points compared to our last year's margins. Net profit has been strong at slightly more than 42,000 crores, with a net profit margin of 18.7%, bringing our EPS for the year to 115 rupees. As I said, cash from operations continues to be very strong. We converted more than 105% of net profit to cash which translates to 44,000 crores of cash. Our cash in hand at the end of the period is just short of 50,000 crores. I spoke about the customer numbers earlier and the innovation agenda, and from a headcount perspective, if you look at the full year performance from a segmental perspective, this has been a second year of standout performance from our largest geography, North America. North America for the full year has registered 15.3% growth, bringing it just short of 15 billion at $14.9 billion in revenue. UK has again been an exceptional performer this year. For the full year, they've grown at 15%, and as I shared earlier, for the quarter, they've grown at 17% year on year. So there is a steady acceleration in UK, which is very encouraging. Continental Europe, despite all the challenges that that market has faced, has still clocked double-digit growth at 11%. From a BFSI perspective, which is our largest vertical, it's coming at about 12% growth. And retail CPG, driven by outperformance, especially in travel and hospitality, has a second year of very high growth, coming in at just short of 20% on a year-on-year basis. And life sciences continues to its strong run at 13.3%. So overall, a strong set of numbers to end the year at. We will, as we look into the near term, we had shared with you that the demand scenario is varying by market. Last quarter, I had shared that we expect North America to recover meaningfully through the start of the year. That recovery has obviously not materialized, and it has turned out to be more negative or more slower than what we had originally expected, and that shows through in the numbers. The other markets have behaved along the expected lines. I had shared with you our strong performance in UK, and that, as I said, has continued to accelerate. And the challenges in Europe are well understood, and that market has also played along those lines, though we see increasing positive sentiment in Europe, and we will share that in terms of what we are seeing on the pipeline also. So overall, from a market segment perspective, along expected lines, except the near-term weakness that we have seen in North America. The North America story also translates into BFSI. BFSI has had a strong run, and we are watching carefully the developments. But overall, immediate impact is less, but of course, the near term needs watching. Retail CPG and life sciences, the story is very similar to what I have explained in the earlier one. So from an outlook perspective, an environment where the demand for technology-led transformation, the demand for both optimization as well as transformation agendas from our clients continues to be very strong. But it's something that requires very nuanced approach by us, by market and by vertical, which is where our focus has been. With that, I want to conclude this presentation, and as all of you are aware, this is my 25th and last presentation as TCS CEO, and it's been an absolute pleasure and an honor to have to do this. Thank you for all of you for being here. I will now call upon Kriti to share his perspectives on the way forward, and then we will take the proceedings from there. Thank you, everyone.
First of all, I would like to start by thanking our chairman and our board of directors for entrusting me with this huge opportunity and responsibility. Also want to thank Rajesh, NGS, and senior leadership colleagues here who have been with me all along and supporting me and backing me. So I'm taking this based on the support I am promised from all of them, and I'm very happy to take this one. And whatever this organization has given me, it's my responsibility to give it all the other associates that are working with us here. Coming to the business side, like Rajesh said, we had a good, strong, closing the year on a strong note. Particularly, the year has been really good. and the demand environment has been also very strong. Okay, we have closed the year with an order book of close to about $34 billion, and specifically for Q4, our TCV is about 10 billion, which is probably one of the highest for us. And our Q4 order book contains an all-time high number of deals with TCV above 50 million. And it's also a very, very well distributed set of deals across all verticals and geographies. For instance, the BFSI TCV is about 3.1 billion, and retail TCV is in the order of 1.3 billion. The TCV for North America is about 5 billion. So, and also if you look at the nature of the TCV, it's coming a lot from new account wins as well. So, we are quite enthused by the kind of demand we see. Like we always been saying that the sustainability of demand, like the IT demand is quite resilient because most of our customers are embarking on what we call a multi-horizontal digital transformation. And despite the short-term uncertainties, we believe the TCV makes us believe that our theory and thesis is correct, and the demand will sustain, and there could be some uncertainties in the short run, and we need to adjust and work towards it. So with that strong demand is what I am taking over this role, and I hope that we'll have a great year going forward. Thank you.
Thank you so much, Kriti. Thank you so much, Rajesh. As always, we start the question and answers. Please introduce yourself, of course, and if you can stick to 2 questions, and ideally take your questions one by one. It gets very difficult to keep a track. So let's start with CNBC TV 18. Rima.
Thank you very much for that. Rajesh, first question, why are you stepping down? Are you stepping down earlier than what you had said? You had said 15 September. Are you going to be there?
Yeah, absolutely. I'll be there till 15 September, but
you won't be,
part of the transition. We're going to be doing the handover on 1st of June.
On 1st of June. Okay, got that. Could you tell us why growth has been a bit subdued this quarter? Kriti just ended his statement by saying that there are some near-term uncertainty right now. So just a 0.6% quarter-on-quarter constant currency growth. Has it been lower than your expectations? And Samir, if you could explain the margin miss. You all had guided for exit margins of 25%. So despite the rupee benefit, attrition coming down, what happened on the margin front? And Kriti, can you elaborate a bit more on BFSI? What exactly is happening? Last time you all indicated that PNC insurance mortgage is weak. So you had already raised a red flag on these two. Are there more segments, or are these getting worse? What exactly is happening on BFSI, especially given what we've seen in the last 2 months? Okay. NGS on deal wins. Each one is one question. She allowed 2. All of you all have to remember only your own question.
Divided into 7.
Each one is one question. Rajesh on growth, Samir on margins, NGS on deal wins, Kriti on BFSI, and I have one for Milind. So can you explain this, $10 billion? If it's that strong, why is it not reflecting in the top line? And break it up in cost optimization and the transformation. I think last time you all gave a number of 20 cost optimization deals so far this year. What's been that number? And Milind, FY24 hiring target. I think last time you said 40,000 would be the number. Do you hold at 40,000 or any change in that? Thank you.
All right.
One each.
Yeah, no, so Rima, as I said, this quarter has definitely come in weaker than what we originally anticipated, and primarily coming out of North America. North America had slowed last quarter, but our expectation was that it is a cautionary stance from clients, and based on our discussions with clients, and we had expected that it will bounce back into the first few months of the new year. That has obviously not happened. Partially because of the lingering concerns, and then exacerbated by the financial volatility that you saw in the banking system there. Very difficult for us to call whether how long this is likely to last, or how the near to medium term will turn out. But essentially what we are looking at is that from an operational perspective, we have been tightening, so we are well positioned to be able to react on either side. We had brought down our lateral hiring and our overall capacity addition, leveraging the strong investments that we had made in the last year. we are systematically using the return to normalcy on travel to reposition our employee base in North America away from the short-term contingent labor back to our more stable employee-led delivery model with a slight BA side. So we are doing the operational steps required. We are positioning ourselves to be able to either ride out the short-term constrained demand environment, or to be able to react if the market turns positively. So that's where we are currently at. Calling it forward is difficult, so we are doing what's in our control in terms of positioning ourselves to be able to handle it on either side of it.
From a margin perspective, what we, like Rajesh pointed out, what we saw at the beginning of the year and how the macro environment as well as client sentiments turned increasingly negative getting into February as well as into March is something what reflected both on the revenue side and on the cost side. And if you look at it with discretionary spend getting impacted, the revenue gets impacted immediately, while in the very short term, cost is sticky. So that's where, but if you look at it, we could get a flat margin. And if you see, like Rajesh mentioned, optimize a lot on the fees to external consultant side, the business associate side of it, and with some help from currencies and operating efficiencies that offset some of the increase in on-site costs.
What's the breakup on margins as you typically give us?
So it's flat, so it's hardly anything. If you look at it from a, there's a significant improvement, almost 1 percentage point on the BA side of it, that is offset or cancelled out on increase from mainly on on-site manpower expenses.
Okay. So on the BFS side, last quarter itself we had called out there are some, because of the interest rate and inflationary regime, like there have been issues in the insurance sector, capital market and mortgages. What changed this quarter more than anything to do with inflation or interest rates is sentiment, right? Like what happened with one in the banking sector, the sentiments were quite down and people are all not sure what's going to happen. And so there was a greater rush to preserve cost. And they were willing, most of our clients were, whatever they can delay, like defer for a quarter or two, they were deferring it so that they can conserve cash and be ready in any eventuality. So I would say it's more a sentiment at play than anything structural. Actually, if you look at many of the large banks who are our customers are benefiting here, like the deposits are again at an all-time, the deposits are increasing during this banking crisis, so they would be actually better placed going forward. That is for North America. In fact, even in North America, Canada is doing very well, UK is doing very well, and Europe actually, but for 1 or 2 specific instances, is doing very well for us. Nordics is doing very well. So there are, yes, there are some issues in US, but most of the other regions are doing quite well for us. And as I said, we have a strong order book as well. So we don't want to say that in a particular quarter these things will be, cannot call it immediate quarter, but medium to long term we are very comfortable.
Yeah, and the deal wins. Yeah. Overall, I think $10 billion by any measure is a fantastic performance by our sales folks. Extremely pleased with the breakup of those 10 billion deals. North America contributing to about 5 billion of them, BFSI contributing to about 3.1 billion, retail 1.3 billion, and it's a mixture of all verticals, all markets, extremely broad based. So we're quite pleased with the way that the deals have spawned and the way that they've got closed right through the year and right through this quarter, I should say. Right. I think in my interactions with all these clients over the last quarter, the conversation starts and stops with ChatGPT Right? I think everybody talks about ChatGPT and what it's going to do, and I think for once, I think very clear that innovation is surpassing productivity. I think, and that kind of theme is what is spanning out in all these deal wins that we have. Right, there's a huge amount of focus on cloud data. At the same time, machine learning is a very, very important area of focus for people. Almost everyone is asking, how are you integrating ChatGPT in your offerings, in your this thing, or do you have plans of that? So, overall, I think, everybody is feeling that, yes, there are no big budget cuts or anything, right? But spend wisely. Right? I think that's the kind of sentiments that we hear. We are extremely happy with respect to the deal wins, where we are. And in fact, there's one mega deal in that overall 10 billion, and minus that mega deal as well, it's a fantastic performance. Huge number of deals which are 50 million plus, right? Which augurs well for our future growth, right? I think that's what I would say.
Rima, my answer is simple. Yes, 40,000 stands, campus offers. In fact, we just concluded our national qualifier test where 600,000 plus people appeared in the test. And so far, we have already issued 46,000 offers. So, yes, it stands, 40,000.
Shivani will
46,000 offers so far.
Anisha Jain, ET now, and Anisha, no memory exercise, please.
Well, I thought you'll be kind, given it's the last one with Rajesh. We'll be allowed to take at least more than 2 questions. But good evening, gentlemen. Hi, Anisha, this side from ET now. Rajesh, wanted to understand from you, is it fair to say that FY24 growth will be more back-ended versus front-ended? And given the fact you're talking about increasingly negative sentiments in US, which started from February onwards, is it likely to get worse before it gets better in North America? Kriti, the question to you is, what is, if I had to ask you 2 focus areas as the CEO, what will that be? And also the corporate structure that was put into place last year, will that continue, or will there be any rejig as far as that is concerned? Samir, is it realistic to say that 26 to 28% is not going to happen in FY24 at least, given the kind of slowdown that we are seeing? And any deal cancellations, etc., or delay in ramp-ups that you are seeing on the ground? NJS, the question to you is $7 to $9 billion. Does it stay? The deal win pipeline per quarter that you had earlier suggested, the guidance for that. And also you talked about no budget cuts. So if you can elaborate a bit on that, whether it is across the vertical, or is BFSI at least seeing some budget cuts, etc. And Milind, lastly to you, the question on attrition. When are we likely to see those numbers back coming to around 16%? And on hiring addition, etc., is it likely to be much higher than 40,000, 46,000 that you've already done, or will it be in that range?
All right. I'm very tempted to say that in the hands of the new CEO, we all front-loaded. But difficult to call it. So, like you said, the volatility is fairly recent. We'll need to see how it plays out. Like Kriti said, the sentiment is negative. Once that plays into the system, it will take some time for it to play out also. So, immediate near term, definitely wait and watch mode. But medium term, from whatever discussions we have had with clients, we are not seeing large-scale project cancellations. We are not seeing people rethinking their transformation agendas. Many of the longer-term projects are still on track. It's more the discretionary projects which have been deferred or put on hold, or things that you would expect to start off post the winter holidays that has not yet come about. So these are the immediate impact of that sentiment going away. We have seen nothing that indicates that the structural story on technology is in any form impacted, but it requires careful watching. But overall, we continue to be quite optimistic, and we'll have to wait and see what the timing of it will be.
So the next couple of quarters are going to be softer, given the fact all that is playing out.
See, the thing about US is that it moves very fast. decision making is very, very fast. And also, compared to any of the markets, US is the most risk-taking market. So they move fast on the downside, they move equally fast on the upside. So I wouldn't say that 2 quarters is out. They reacted to it. What they have done is to defer, the most deferrable projects, but it could come back equally fast also. So we'll have to wait and see.
See, from a focus area, no surprise, like immediately I would like to meet our customers, understand their priorities, what they are focusing on, what they intend to do in the near term and medium term. I would also like to, I have not gone ahead and met though we've been talking to our immediate leadership team, we would like to meet the larger set of associates and provide them the comfort of continuity. And the last one from my focus is all these years I've been quite comfortable on the BFSI side, being familiar, like I need to get comfortable with the non-BFSI side of the business. That would be my focus. From a structure perspective, Anita, like you know that the structure was put in place after a lot of internal deliberations. So as I meet all customers and meet our associates, if there's any tweak that's required, we will do it appropriately. But it's essentially based on the discussions. As I said, the structure was put in place after all the internal discussions. So there's no rush to do anything there.
Coming to 26 to 28, it is a guiding beacon, and it's not a top-down target. We as a team across with business units, the management team and all, we firmly believe that our long-term cost structures can help us deliver 26 to 28, and we can operate in that band. Having said that, given the current uncertainties, it's too difficult to predict when we will get it, but that remains a guiding beacon and something which we aspire for getting as soon as possible. On the project cancellation side, it's more on we are seeing projects being deferred, not, but at the same time, given the order book, you also see projects where customers want us to help them on getting cost takeouts, larger transformation projects. So it's a mixed bag, but on the current projects on hand, there could be a bit of deferment happening.
The ramp-up could be a bit slower. And is it fair to say that at least 24 to 25% bandwidth will be maintained in the near term, immediate term? I'm not asking you to...
Alisha, let's
well, we'll not get into the guidance range or a specific one. As I said, there are uncertainties. You also need to keep in mind that we give typically our increments at the beginning of the year, and it's a full cycle increment. You need to factor that in as well.
The overall, as I said, minus the mega deal as well, that we are in the upper side of the 7 to 9 billion thing. I think we are comfortable with that range. I think the overall qualified pipeline looks extremely good, extremely broad-based, and in different stages in which we are operating, and that looks very promising. Right? I don't think so. There's no reason for us to tell you that we'll be going below 7. Right? It's not warranted. Overall, the qualified pipeline that we have, the stage at which they are in, I think we are quite comfortable and confident of that 7 to 9 billion range.
And no budget cuts for the year, only deferment of sorts?
Yeah, as I said, look, once we go and meet the clients in the next 1 or 2 months, I think a lot more clarity will emerge. But as we met the few customers in the last few weeks, most of them felt that, look, there is no imminent budget cuts or anything like that kind of discussion, but spending wisely is the mantra.
Yeah, on the question of attrition, we came down from 21.3 to 20.1. It seems low because of the way LTM is calculated, but if you look at quarterly annualized attrition, our attrition has come down by 4.2% from last quarter to this quarter. So that's a huge thing. And for the future, basically, I expect us to come to pre-pandemic levels in the second half of this year.
And what about Alisha, let's take care of this. Last year, if I can just put in one more. Wage inflation in FY24, what your expectation is versus FY23, even an industry outlook.
We will, like what the business is saying, we also basically look into the markets, how it is going, and we'll play it by the ear. But we obviously will do the right thing for our people.
We'll take all additional questions offline. Harshada Sawant, CNBC Awaaz.
Good evening and good to see all of you. I wanted to understand, Kriti, from you. You've seen the 2008 crisis. I want to understand, when you speak to clients, how different is it now? How is the sentiment different than it was then? And is it more concerning, or is it far better than what it was in 2008? Also, could you give me a little bit of texture on the deal wins in BFSI? 3.1 billion is good, but what kind of deals are these? Are these long-term deals, short-term, and what's the visibility primarily on BFSI going forward?
Sure. From a 2008 perspective, there is no comparison. Like it was almost like a feeling at that time sky was falling down, right? Like today, if you really look at it, what has happened? There is one or two banks that have fallen, and their overall assets is just about a percentage of the overall US banking assets. So it's not, this essentially spoils the sentiments, but we don't see a banking crisis. And also the government has stepped in and to assure everyone that this could be contained in a big way. So it's a sentiment issue. I don't think we are comparing this with the 2008 crisis at all, and that's been the, whatever customers are doing, it is, yes, something has happened, should we protect ourselves, should we save some money for the future. So that's the approach. From a overall our order book perspective, it's I would say evenly split, like, but as you would expect, there would be more cost and optimization engagements at this time than that would be in a normal scenario, because when there is uncertainty, customers do tend to save cost and drive projects that would save them cost more, optimize more than transformation projects.
NGS, you mentioned that in conversations with clients, people are asking you, how are you going to integrate ChatGPT to your offerings? Have you started doing that? What kind of integrations are we likely to see?
The answer is yes. Not necessarily ChatGPT, but then I think let's use the word generative AI. I think TCS pioneered this whole quality metrics, delivery excellence programs. Over the last 3 decades or 4 decades, we have collected enormous amount of data on our delivery performance and delivery metrics, and how we perform in technologies, new technologies, evolving technologies, emerging technologies, everyone. So you can cut and slice and dice it the way that you want it. We have that kind of data, right? The interesting thing is that, look, how do we apply aspects like machine learning, deep learning on the data, and then see how we could raise the bar on our own delivery capability, on our own delivery performance, and then improve the overall quality of experience for our clients, right? Which essentially means that, look, there will be a lot more reusability of code, a lot more generative capability of code, as well as more proven code of delivery to clients. And one is that what we do within TCS, another is that how do we help clients to reuse their own code, better. So there are a lot of thinking going on, and a lot of pilots are being executed. So naturally, ChatGPT kind of a technology is like any other tool, any other technology, right? So as it matures, I think we will be ready for it. We will have a center of excellence around it. We will have core competencies built around it, and then see what are the drawbacks on it, what are the pros for it, and then use it the right way to deliver responsibly and meaningfully to our clients.
How soon do you see it turning into a revenue?
It's happening. It's already happening. It's happening already. Yeah.
Thank you, Harshad. I appreciate that. Ekta Suri, Zee Business.
हेलो जेंटलमैन, एकता फ्रॉम जी बिजनेस। हम बीएफएसआई सेक्टर की बात कर रहे हैं, आपने क्लाइंट से बात की, आपको लगता है कि अभी भी उस सेक्टर में क्या अभी थोड़ा और पेन बचा है, like or it can recover a bit more fast?
It will recover. Okay, it's difficult to say whether there is some pain left or not left. Like as I said, like it's first of all varying from geography to geography. Like BFSI sector, don't look at it as one single set. Like we are doing quite well in UK, we are doing quite well in Canada. Like our APAC market has done well, and even in Europe, Nordics have done well. It's some pocket. Essentially, US is only a issue that we are talking about here. And there also, like you look at the last 2 weeks, even the US stock market is slowly improving. So the sentiments are improving, but there could be some vulnerable banks all the time, right? And all it takes is one of the vulnerable banks to fail for the sentiment to go back. So there is no structural pain. Okay, as long as the inflation comes down, interest rate comes down, everything is going to be much better. Okay, the issues are around inflation and interest rates. Otherwise, the banks are all doing well. Even SVB was a good bank, doing quite well. So I don't want to say that there is a pain left in the system. The sentiments and the overall macroeconomics is what is driving this.
और सर आपने बात की कि क्लाइंट्स ने बोला है कि स्पेंड वाइजली, कोई बहुत बजट कट नहीं है. सो व्हेन वी से स्पेंड वाइजली, डू यू थिंक सो कि अगर ग्लोबल स्लोडाउन की बात ना होती तो शायद उनके बजट्स भी थोड़े ज़्यादा होते और वो जो वाइजली स्पेंड वाइजली की बात हो रही है वो थोड़ा बजट एक्सपैंड हो सकता है रादर देन यू नो कटिंग कॉर्नर्स इन देयर बजट.
बजट एक्सपैंड भी हो सकता है, कंट्रैक्ट भी हो सकता है, बट इट इज़ नॉट बिग, राइट? इट कैन बी plus minus 1 or 2% here and there in the overall budget. This is the impression that we gain, you know, from the initial conversations that we have with our clients, right? But bottom line is that the kind of programs that customers were embarking, whether it is cloud or data, they are kind of irreversible, right? They have gone ahead with it and they will continue to invest in it. They will continue to leverage the cloud and data capabilities for their own growth, right? But there are, in any project, overall portfolio of projects, there are certain projects that will have to keep going, certain projects, the pace of which can be slowed down, certain projects can be deferred, right? That's the kind of a portfolio typically every client has, right? So what we are seeing is based on the sentiments, there have been some deferment, there have been some, let's say, taking off the pace of execution. Some, you know, keep going at the same pace that we used to do before, right? So I think, you know, that's the nature of the beast that we are facing right now.
और सर हम AI जनरेटिव चैट जीपीटी के बारे में भी बात कर रहे हैं. यू नो बहुत से अभी नया एक फैक्ट तो नहीं बोलेंगे बट इट्स पिकिंग अप अ लॉट. सो यू नो आई लाइक टू आस्क यू सर, बहुत से लोग ये कह रहे हैं कि AI और स्पेशली चैट जीपीटी जैसा अगर जनरेटिव AI है तो वो जॉब्स पर भी बहुत असर डालेगा. व्हाट्स योर व्यू ऑन द सेम?
अभी हमने कितने सालों से देखा है कि कोई भी नई टेक्नोलॉजी आती है तो जॉब कम नहीं होते हैं, जॉब बदल जाते हैं. वो भी अभी इसमें भी ऐसा ही होगा. हम लोगों को दूसरे स्किल्स में लोगों को एक एड ऑन करना पड़ेगा तो व्हाट दे लर्न एंड बेस्ड ऑन दैट एक्चुअली द न्यू वैल्यू विल बी क्रिएटेड फॉर द कस्टमर्स एंड फॉर आवर पीपल. सो इट इज़ नॉट गोइंग टू बी nullification of jobs. It will be replacement and new jobs coming out as a result.
Thank you. Dibangana Ghosh from Moneycontrol.
Good evening, gentlemen. So my first question to Rajesh. So we have been hearing that there are talks going on that there is a possibility that your advisory role might get extended. So any update on that, and will you be continuing beyond September with TCS or Tata Group in an advisory role? My question to NGS, sir. So you have been mentioning about ChatGPT. Could you share some specific industrial use cases? Because I know TCS has been working a lot in terms of developing those technologies for clients like Google and Microsoft as well. For Milind, so in terms of the industry has been under pressure, we have seen there, and it's reflecting in terms of onboarding delays of freshers, plus some companies have decided to do a pay cut in terms of what the freshers were initially promised. Wanted to understand how is TCS assessing the situation, and also can we expect 100% variable pay? For Kriti, could you tell us a little bit more about if you're planning any structural reorganization? Will you be adding BFSI as a part of it?
The first one is easy. This is TCS results presentation. My personal career progression we'll talk offline. So only one, yes.
Yeah, so I think, ChatGPT is something that, I want to avoid that word, but then generative AI is the thing that we are focusing on, right? TCS, for example, if you take TCS banks, right, the complete code is generated using our Mastercraft tool, right? So the capability and the skill set that we have in terms of developing software that generates software is a core competence of TCS. Okay. If you look back to DataQuest in 1990, there was an article on TCS which talks about artificial intelligence. So artificial intelligence is not a new subject for us, right? It has been there, but then it's just that it has taken so much time to mature, and there are new possibilities right now, right? So the intent is that we have a lot of our data, lot of our proven code, repository of code that we have, libraries that we have, architectures that we have, design patterns that we have. All of that, how do we leverage to provide that generative capability to developers, which will result in proven code that can be developed. That's the focus that we have, and I think, that's the kind of work that is going on already in TCS right now, right? Regarding use cases, I don't want to call out any use cases, because to me, any technology where use cases have come in, they have never matured. In my perspective, if you take blockchain, everybody talked about use cases. Then we didn't see blockchain to be a big wave of thing, right? I'm not saying that blockchain is not successful, right? Blockchain is there. So I think we are focusing on how do we leverage the generative AI as a technology to deliver enterprise capable systems. I think that's the focus, and I think we are reasonably advanced about it.
So any update on the BSNL deal?
Offline.
Can you repeat your question?
Yeah, so I was asking, how are you assessing the whole onboarding, fresher hiring situation, given that a lot of companies have started to delay onboarding, plus there are pay cuts happening in terms of what freshers have been promised initially. So wanted to understand how is TCS assessing that situation, and also what do we expect, and will we see 100% variable payout this time?
So answer is simple. We always have honored all our offers, and will continue to do it this year also. There were some delays in a month or two for onboarding people, but it will happen. We honored all the offers. So, and in future, and no reduction in salaries, nothing. So whatever we have committed is what we honor. With respect to variable pay, yes, it is 100% variable pay this quarter.
Okay. Any hikes? What is going to be the quantum of the hikes? Sorry,
Okay.
I'm not getting a turn. I'm just
So our hikes are similar to what we normally do every year. For high performance, it can be in the range of 12 to 15%.
What is the company average?
I think without giving the average, let me just say basically what we normally do means high performance 12 to 15%, to go from 12 to 15% to 8% to 5% to 1.5%. That depending on the performance.
Tushardip from BQ Prime.
I had a question for
Sure.
Kriti. Yeah.
See, but I answered that question before as well. Like, we are not in a hurry to do any structural change or organization change. We would be talking to the associates, we would be talking to the customers. We will see what is required and do whatever is required at the time, the tweaks, whatever we need to do, we'll do. We are not in a hurry to. So
Right. Just a
Devangana,
follow-up
we'll
there.
take that offline. We are genuinely running out of time.
Will BFSI be a part of, just one question, will BFSI be a part of the structural reorganization?
I'm not even promising a structural change. Why are you asking? BFSI will be part of that.
I mean last year's
Tushardip from BQ Prime.
Hello, gentlemen. Couple of questions. First, Kriti, how do you see the BFSI growth in the next 2 quarters? Given that we are now at 9.1%, do you see BFSI growth going back to double-digit growth in the near term? And what are your ideas for the full year as well? I mean, FY24. Rajesh, you are going away quite early, 3.5 months as per the scheduled date. So how has the transition been so far with both of you? Those lines. a small question to Milind. NJ sir mentioned that we have started incorporating generative AI into your products. So how have the staff also been started training on these technologies? That's it. Thank you so much.
Tushar, like on the BFSI growth side, I'm not going to call on what's going to be happening in the next 2 quarters. Like as we don't give guidance, and also we said there is a lot of uncertainty here. You need to look at what is our demand. Okay, our demand has been very strong. So if something doesn't happen in Q1, it doesn't happen in Q2, it will happen in Q3 or Q4 because demand is there, customers are willing to sign up new projects. And more importantly, our thesis, as we said, is we are in a phase where the technology is at the right center of the business transformation, and it makes a huge competitive advantage, gives a competitive advantage to all the clients. So that spend doesn't go away anywhere. Does it happen today or does it happen a couple of quarters later? It's going to happen, and we are also in it for a long run. We would continue to train our people, we'll continue to work with our customers to ensure that those projects are delivered to them. So it's very difficult to say will it be Q1, how Q1 will be or Q2 would be. But we believe long-term quite strong, particularly based on the order book we have.
Sure, I'm not going away early. So September 15th stays. But from a transition perspective, this is classical TCS transition with our clients also. So first half, I am primary, he is shadow. Second half, he is primary, I am shadow. Having said that, as I said, I don't expect the transition to be rocket science, but it needs to be done diligently. So we will be available, but it's going very smoothly. We were focused on this results. We are now going to be traveling for the next 6 to 8 weeks, meeting with customers, meeting with our field teams, and that's been planned, and then we're going to be executing on that. So exact center would have been June 15th. June 1st is as good a date as any, but it's as per plan.
I think building capability standpoint, AI has been a large practice for us for many years. Generative AI is about applying some of that expertise in the model in which we operate. That is something which is being conceptualized. That is also more about the operating model itself and how it changes and what does the AI coworker do in the future. All those things are being conceptualized right now, and appropriate training for the appropriate people has already begun.
Ashish from PTI.
So most of the questions answered. Just a small thing. Is the mega deal win Indian? Is the mega deal win? Is it an Indian deal win, and how big is it in the $10 billion?
Oh no, that's the one that we announced earlier. It's in UK in the insurance space with Phoenix. That's the only one. That's about 750 odd million out of this 10 billion.
Shivani, Business Standard.
Hi, gentlemen. Good evening. So the mega deal question has been asked by Samir. What has been the impact of SVB, Credit Suisse on the margins, if you can elaborate more on that, if there has been this quarter? Kriti, one question on the banking sector. While some of these banks have folded up, you've had long-term relationship with them. What will be the impact on the existing contracts that you have with them? Any significant, or there will be some more time for you to know what that impact will be? Rajesh, final quarter, you kind of sounded a little, I don't know, slightly different when you were giving presentations. So thoughts on that? You're smiling, really, but still. Thanks.
So we don't call out client-specific details, so I'll not be able to add more color on what you have asked. But if you look at our quarterly margin, it's sequentially flat.
So on the contrary, you mentioned specific clients. As you know that SVB has been taken over by a different new bank. And so most of the contracts that are all all the critical contracts have been awaited to the new one, and we are working for the new bank. And it's true for SVB and for the other case also. So all the critical work is continuing. There are some change and transformation programs that have been deferred or paused.
That impact you will come to know how soon or later?
Not a material impact for us.
Economic Times, Ramita, and we have Surbhi as well, so one question per person, whoever.
So one query for Milind, how many freshers onboarded in Q4? For Rajesh or Kriti, whoever would like to take this, QOQ growth has been a little over 1%. So, I mean, that is just a little more than uncertainty. We would like to understand how is, TCS preparing to bag large deals to kind of also, if customers are being more cautious in terms of, the outlook on pricing, because over the past few quarters, the discussion that we had was that pricing was improving in a few pockets, but now that they are more cautious, how has that impacted pricing in general? And yes, in terms of large deals, how are you looking at it?
Ramita, 0.6% is obviously, but as I said, the main shift is in North America, and it's a fairly short-term shift. So if you look at, let me cover UK, Europe first, and then I'll come back to North America. UK is almost 5% Q on Q, if I remember correctly. Very, very strong, and not just the quarter performance, both the pipeline, near-term visibility, everything is very strong. So UK is actually, as I said, has been accelerating over the last few quarters, and this quarter also it did better than last quarter in terms of growth itself improving. So UK is in a good place. Europe, interestingly, Kriti touched upon it. So Europe, we spoke about sentiment improving in Europe. This time our deal wins in Europe have come in much higher. So deals greater than 50 million in Europe, in this quarter we have closed more than what we did in the first 3 quarters of the year. So the Europe sentiment is now translating into actual deal wins. On a quarterly basis, the actual TCV has come in almost 60% higher than last quarter's TCV. So Europe, that sentiment is converting into actual deal wins. That needs to convert into revenue. If I look at specific segments, BFSI, Nordics and Benelux, those areas were earlier stressed. They have actually turned positive, but Central Europe requires watching. So we need to look at it from a regional perspective, but Europe incrementally so it was on a falling trajectory. It continues to be on that falling trajectory, but incrementally it's in a positive place. That brings us to US, which is our largest segment. The US weakness is very, very recent, right? And whatever we have shared with you in the past, our stance on that has not changed. We don't think there is structural weakness in it. We are not economists. So many people have called me and said, I told you so, there is no soft landing and you can't raise interest without a recession. Maybe that is true, maybe that is not. So from our operating perspective, our stance is one, as I explained, we are making sure that our cost structures and our operating model is tuned to be able to react on either side. And from our field perspective, we are staying very close to our customers and making sure that we are fully connected. And we are participating in those discussions and dialogues, irrespective of when the decision making will return.
All right, that was the management out there for TCS. But what really stood out for all of us in the presser, I'm sure Nandita, you'll agree, Rajesh Gopinath, the outgoing CEO, comments which said that the quarter is been weaker than anticipated, primarily due to North America, where it was expected to come back post-Christmas, which didn't happen. And this was primarily because of North America saw that financial volatility in the banking system, and it's difficult to call out how long this will last. So that was one concerning comment out there. But the new CEO, however, said that he was heading the BFSI segment for 34 years overall for TCS. He said now, at this point of time, his focus will be to understand the non-BFSI side of the business. And he also said that at this point of time, you can't compare the 2008 situation with the crisis, select banking crisis that have happened in US, right? He said it's more of a sentiment issue, less of a structural pain. Overall, that's how it's stacking up. But Nandita, what do you make out of it before we toss it back to Chandra out there?
Well, the TCS generally doesn't give any guidance, but they've said that margins are expected to remain flat in light of, the environment, the macro environment in the US, as well as, when it comes to client spending also, they do not, they haven't seen any scale back when it comes to spending, no project cancellations. However, the spending has been cautious, and that is expected to pan out in the rest of the quarters of the new fiscal. But Chandra, let me come to you. Kriti Vasan is taking over on the 30th of June. Well, that was a very emotional Rajesh Gopinathan saying that he will be handing over the reins to Kriti Vasan on the 30th of June, even though he intends to stay back till September 15. Well, you have covered TCS quarter after quarter. What are your thoughts then? What are your key takeaways from the management commentary?
Kriti Vasan is taking over on June 1st, not June 30th.
I'm sorry.
Rajesh is staying on till September. So, he is going to accompany Kriti to client meetings and so on. So I think they're trying to make the CEO transition, the succession as smooth as possible. But certainly, Kriti Vasan taking charge earlier than what people expected. They did not specify a timeline before. They had just said sometime in FY24, but looks like he's going to start, on June 1st. So this was Rajesh Gopinathan's last earnings presentation and his 25th at that. If I look at the commentary, it's honestly not very encouraging. It kind of shows you the pressure that the IT sector is under. What remains to be seen is if TCS will set the tone for the rest of the industry. So all eyes are going to be on Infosys
a little bit of patchy, tone form, Chandra, but we'll quickly toss it back to Ashutosh out there and understand from him what does he make out of the commentary and anything that stood out for him in the entire presser.
Yeah, hi, Nikki. I think it's pretty much in line with what we were discussing prior to, cutting over to that presentation. So they did not have they had a fairly reasonable the Q4. But they're not too sure because they expected it to be better than what it turned out to be, and which is exactly what we were discussing, that there's still some pain remaining in Q4, Q1, which is going to be the March to June quarter, and things will look up in the second half of this year, and primarily because there's no structural problem, and that's essentially what the TCS leadership was also saying. They made this comment a couple of times, is customers are not actually canceling, but they're deferring, there's no structural problem, and kind of agree with them, because what we are seeing, at least from our perspective, customers are being cautious, they're conserving their resources, and in fact, there's still a huge amount of digital or technology sort of investments that companies need to make, because this was, if you look back, say a couple of years ago, 2021, there was a huge surge in the digital transformation activity, which kind of reached its pinnacle that year. If we had not had the macro challenges as we had in 2022, we would have been in a completely different situation as of today. But as things settle down, we expect it to become better. And I believe there's a significant latent undercurrent around technology, and the firms need to invest quite a lot. And that's the reason you saw a lot of questions around generative AI and in other things. There's a lot of technology demand, especially around emerging technologies, and the need for organizations to differentiate, and that's where they're going to lean on their service providers for right sort of partnership and help them drive that. So, but having said that, all that will come. Right now, it's all uncertain, and it's kind of reflected in their commentary.
All right, Ashutosh, we'll leave it at that. Thank you so much for taking out the time and speaking to us. But we're going to quickly toss it back to Chandra and ask her about the final comments. What does she make out from the PESA, and any comments that stood out for her? Chandra.
Right, Nikki, thank you for that. So a quick snapshot of Q4. I think revenue and margins were a slight miss, certainly below what we were expecting. The management commentary is not encouraging at this point. Clearly, they see a lot of macro headwinds, and he even said it's difficult to call out by when they expect a recovery. And Rajesh also spoke about how the client sentiment has weakened in Feb and March, and this led to an impact on the revenue and margins. For now, they are not seeing any budget cuts, but they have said that the clients are spending wisely and discretionary projects have been deferred, but they are confident about a solid order book. But I think, the hiring number is also muted for FY23 compared to FY22. The net addition numbers continue to be weak. So overall, I think the sentiment is not so great as far as TCS is concerned, a reflection of the larger macro environment. And they said that, we will have to take a more nuanced approach in growth targeting specific markets and specific industries and clients. So we'll have to wait and see if this is going to be an industry-wide trend or if this is specific stress that TCS is seeing in BFSI, which will turn around in a quarter or two.
All right, so that's clearly the commentary coming in from Chandra. In that case, overall, if you look at the performance, Nandita, IT index over the last if you compare that, the quarterly figure, it's 450 basis points higher. There's an outperformance coming in from the IT index overall as compared to the Nifty. If you look at the valuations at that, there is a steep correction which has come through for IT. Mid-cap IT at this point of time, they're trading at that premium levels out there as compared to the larger counterparts. But net-net, if you look at the valuation overall, we're seeing that amount of fear creeping in even into the valuation side of the business. 13%, 14% kind of correction is what the index overall has witnessed in the last 1 year or so. But Nandita, any specific key takeaway that you're picking out from the entire conversation?
See, as I said, the whole aspect of, there have been no cancellations and margins will be flat, even though, like what Chandra said, the sentiment is pretty downbeat. IT spending, may in fact be hit on the back of what's happening, the banking turmoil rather that has unfolded in the US. And aside of that, I think from a market standpoint, what the street will be disappointed with is the margin miss, and of course the fact that constant currency revenue has come in at an 11-quarter low of 0.6%. Mind you, that is still expected to be better than peers compared to Infosys, which according to CNBC TV18 poll is slated to see a 0.4% growth, constant currency revenue growth on a quarter-on-quarter basis. When it comes to HCL Tech, in fact, and Wipro, there is expected, the expectations are that there will be a contraction when it comes to the constant currency revenue growth on a quarter-on-quarter basis. So we will have to see how the stock reacts in tomorrow's session. We also have an analyst who will be joining in shortly. I'm not sure whether he's through or not, but we will be discussing how the street will be reading out some of these numbers that have come out. But
Right. So, Nandita, if I'm just supposed to sum this up in 5 key takeaways or what we have overall from TCS of how the street will read into it. A, there is a revenue and a margin miss. That's one, given. Client sentiment has actually weakened in Feb and March, impacting revenue and margins. Third, which is important, is no budget cuts. Client spending will be wisely. Discretionary projects will be deferred. Fourth, solid order book. The order book that we are witnessing right now is at all-time high level that the company has registered. I think that's going to be a bit of positive amidst the slew of negatives thus far that we've seen. And attrition has moderated, hiring has muted. These are the 4-5 takeaways that we have importantly. If you talk about the final dividend figure, that's almost to an extent of 24 rupees for this financial year. So that again is a bit of development coming in on that one. But the major hit or the pain point still remains North America, where we're seeing that pain coming in from the BFSI segment. And the new CEO, which actually helms or was the head of BFSI segment, now the challenge for them would be to focus on the non-BFSI part of the growth. So that's where the whole commentary will revolve around. But we're yet to see if the analyst has come in and actually step in on how the basic numbers look in. At this point of time, looks like a slender miss coming in on the revenue, on the margin profile of the company, even in terms of the performance. TCS in today's session was actually gaining. It was up by more than 3/4% out there. In terms of the Nifty IT index, overall we're seeing some amount of traction slowly creeping in. At least
there were concerns yesterday when it comes to this IT pack. We saw the likes of TCS and Infosys, emerging as top losers in yesterday's session. But in today's session, we saw some semblance of recovery coming in when it comes to TCS. That was up somewhere around 1% or so in today's session. Of course, tomorrow Infosys will be coming out with its numbers, and all eyes will be on the guidance. So aside of that, we should be talking about how the hiring has kind of slowed down for TCS, given the fact that last quarter we saw a headcount decrease of 2,100 or thereabouts, but this quarter they have added a headcount to the tune of 821 or thereabouts at a time when the hiring costs were weighing down on margins. Chandra, if you're there, could you tell us how this entire hiring slowdown will bode when it comes to some of these IT companies now? HCL Tech is due to report, and mind you, JP Morgan had already put HCL Tech under negative catalyst watch, given its exposure to the US markets and European markets as well. So how do you expect this hiring slowdown to weigh across some of these IT companies?
See, hiring has always been a strong indicator of growth. So if I look at TCS's hiring numbers, okay, last quarter, it declined by 2,000. This quarter, they have added 800 people, which is still not a very robust hiring number. So if I look at, FY23 overall, they have added over 20,000 employees compared to over 1 lakh that they added in FY22. So it is a steep decline, no two ways about it. Now, when it comes to FY24, their CHRO Milind Lakkad said during the press conference that they are on course, to roll out offers for over 40,000 freshers. He's also assured that they will honor all offers at a time when we have seen companies like LTI Mindtree defer onboarding. Wipro has, offered a pay cut for freshers compared to the salary that they previously promised. So he said, though there have been 1 or 2 months of delay, they will honor all offers. But I think this weakness in headcount addition is perhaps a sure shot indicator that growth is not going to be that great going forward. Of course, TCS doesn't give a guidance, so they did not mention if it will be mid-teen, early teen, but we have seen that growth moderating from mid-teen last year to early teens, 13% odd for FY23. So what's the trend going to be like for FY24? We'll have to wait and see. But overall, I think, there was pessimism in the commentary this evening. They clearly said that, North America, they've seen stress because of the financial crisis there. The turnaround that they expected did not pan out. And they also said it's difficult to call out, how soon they will be able to stage a recovery. But on the positive side, they are sticking to that $7 to $10 billion TCV per quarter. And in terms of TCV wins, Q4 has been robust for them at $10 billion.
All right, Chandra, we'll leave it at that. Thank you so much for taking out the time and speaking to us. All right, there's a bit of brokerage notes which have come out. 7 o'clock is when the con call is going to be taking place, so most of the analyst community will be busy preparing in the notes. But just a little first take from Equirus out there. It says that the order intake is healthy. Seasonally, usually 4Q is healthier. It talks about, the media has cited large deal win prospects from BSNL by TCS, which is still not won or part of order book. This is what the brokerage has to say. So that remains to be seen. The commentary will be interesting and we'll be watching out for that. But how does the TCS actually react next morning? That remains to be the key question. We are expecting some amount of negative bias coming in on TCS and some amount of gloomy, performance coming in for the IT pack unless the commentary in the con call springs a positive surprise out there. But with this, it's a wrap from myself and the entire team who puts this piece together. Thank you so much for watching.